Imagine this. You're standing right there at the bustling heart of India's industrial landscape, and you're witnessing a company that's, well, on the cusp of something truly monumental.
Yeah, quite a picture.
We've been really diving deep into the remarkable journey of Grasim Industries, a
Yep.
genuine titan, nearing a historic valuation of Rs 2 lakh crore.
That's 2 trillion rupees. It's a staggering figure.
It really is. And it's not just a number, right? It feels like a profound testament to strategic genius and some really bold transformation.
Absolutely.
So our mission today really is to unpack the insights we've gathered, explore how this Aditya Birla Group flagship company is doing more than just growing. It's actively reshaping India's industrial and consumer markets. We want to look beyond the headlines, beyond those big figures, to really get the strategic plays driving this incredible ascent.
Okay, let's unpack this.
But what we've uncovered, it's a truly fascinating story. It's all about evolution. Grasim Industries, currently sitting around, Rs 1.95 lakh crore market cap as of August 2025.
Almost there. Almost at that 2 lakh crore mark. And it isn't simply expanding its footprint. It's undergoing a fundamental transformation, really shifting.
Interesting how.
From, a traditional manufacturing giant into this dynamic, diversified conglomerate, making these pretty daring forays into consumer-facing sectors.
It's like paints, we'll get to that.
Exactly. While at the same time fortifying its existing powerhouses. This is more than just business growth. It's like a practical guide to adaptability in this fast-changing economy.
When we started looking into this, what really struck us was just the sheer scale of the ambition here.
The vision.
Yeah. From its roots, decades ago, Grasim has just systematically built this empire, and now it's poised to join a really elite group of companies.
Defining India's future in many ways.
Let's rewind a bit. Back to 1947, the very year India gained independence.
A symbolic start.
Right. That's when Grasim Industries was founded, in Mumbai. And for decades, it was a cornerstone of India's industrial sector. Started with textiles, chemicals.
The traditional building blocks.
Exactly. But this isn't the company stuck in its past, is it? It's a living testament to continuous evolution, strategic pivots.
Indeed. I mean, today, Grasim operates across this really diverse array of segments. You've got cellulosic fibers, critical chemicals, huge building materials.
Which now includes paints.
Exactly. And robust financial services, plus other ventures like renewable energy. It's quite the mix.
It is.
And this strategic diversification, coupled with a very forward-looking approach, that's precisely what's propelled it to a leadership position in India's booming economy. And it underpins that investor confidence we see in the market value.
So this isn't just about hitting a number, a market cap figure. It's about a company born literally alongside modern India, now poised to redefine what an industrial leader even looks like in the 21st century.
It's a fascinating case study.
Okay, here's where it gets really interesting, I think. One of the most audacious moves we uncovered.
Yeah.
Impactful, too.
Yeah.
Is Grasim's entry into decorative paints with Birla Opus.
Yes, Opus. Launched early 2024.
And it wasn't a cautious step, was it? It felt like a bold disruption, a real shakeup in a market dominated for so long by giants like Asian paints, burger paints.
It really was, and the disruption has been incredibly swift. That's the striking part.
How swift?
Well, in just over a year, Birla Opus, and this is clever, they combine its revenues with their established Birla White Putty brand.
Ah, leveraging existing strengths.
Exactly. And by doing that, they've already captured a remarkable 10% revenue market share in the organized decorative paints sector.
10% in just over a year. That's huge.
It is. This wasn't just launching a product. It was a full-scale market assault, planned meticulously.
And the investment behind it, staggering. We saw figures like Rs 9,555 crore allocated as of June 30, 2025.
A massive commitment. That funded the construction of 6 huge greenfield manufacturing plants across India.
6 new plants.
Yep. 5 are already operational, churning out everything from water-based emulsions to high-gloss enamels, waterproofing.
How it works.
In total production capacity is sitting at 1,332 million liters per annum.
1,332 million liters. Wow. That capacity alone signals massive ambition, doesn't it? What's the plan there?
It signals meticulous long-term execution. The forward planning is crystal clear. That 6th plant in Kharagpur, West Bengal, set to start commercial production in Q2 of fiscal year 2026. so pretty soon.
Yeah.
And once that's operational, it will boost Grasim's capacity to an incredible 24% of the entire organized paints industry in India.
24%. So they're aiming straight for the top tier.
Clearly a play for market leadership built on that foundational manufacturing strength.
And they're not just building factories, right? They're building the network too.
Oh, absolutely. Birla Opus has expanded its reach to over 8,000 towns across India.
8,000 towns.
Supported by 137 depots, more than 400 franchise retail outlets, and the product portfolio is vast 179 products, over 1,460 CUs. Features like scuff resistance, superior coverage, they're hitting all the marks.
And the marketing, we saw mentions of that.
Aggressive, very aggressive marketing in the second half of fiscal 25 made Birla Opus the second most visible paints brand in India.
Second most visible already. That's incredible speed.
It really is. This whole move is a game changer. It taps directly into India's rapid urbanization, those rising disposable incomes, the huge demand for home improvement.
Makes sense.
And if we connect this back, this paint segment, even though it's still in that heavy investment phase, it's projected to generate Rs 10,000 crore in revenue within 3 years of full-scale operations.
10,000 crore.
It really shows Grasim's deep confidence in India's consumer future. They believe they can capture that growth.
Okay, so while they're making these bold moves into new areas like paints, they haven't forgotten their bedrock, right?
Not at all. The building materials segment, anchored by their subsidiary UltraTech Cement, remains an absolute powerhouse.
How does UltraTech stack up globally?
It's a major player, currently the third largest cement producer globally, if you exclude China.
Third largest. Wow.
The scale and the growth are remarkable. Just look at Q4 of fiscal 25. UltraTech reported a 17% year-on-year increase in cement volumes,
17% growth.
reaching 41.02 million tons. This growth is directly fueled by India's massive infrastructure push, roads, bridges, and the surging housing demand.
Right.
The building materials segment's revenue alone hit Rs 25,232 crore. That's a 21% jump from the previous year.
And the expansion isn't stopping there, is it?
No, the plans are equally ambitious. Current gray cement capacity was 190.16 million tons per annum, MTEPA, as of May 2025.
Okay.
And there's a clear trajectory to reach 215 MTEPA by fiscal year 2027.
That's huge continued growth.
But what's also really crucial here, I think, is how they're integrating sustainability.
Yes. How are they doing on that front?
Significantly. UltraTech has really ramped up its renewable energy capacity.
Yeah.
It's now 1.02 gigawatts, and its waste heat recovery system power is up to 342 megawatts.
So what does that mean in practice?
It means their green power mix jumped to 35.7% in Q4 FY25. That's up from 25.7% the previous year.
That's a big jump.
It is. And this commitment, it not only aligns with global environmental trends, which is important, but it also enhances cost efficiency, makes their operations more robust, more resilient.
And that efficiency shows up in the bottom line.
It seems so. Their operating EBITDA per metric ton, a key profit measure, rose 7% to Rs 12,270 in Q4 FY25. Reflects that efficiency gain.
And their distribution network for cement, still strong.
Phenomenal. 4,615 UltraTech Building Solutions outlets. These now account for over 21% of their domestic gray cement sales, so strong reach.
Okay, so we've got paints, we've got cement. Now, moving from physical materials to digital platforms. Another pillar we found, Birla Pivot.
Yes, Pivot, their B2B e-commerce platform.
Specifically for construction materials, what's the strategy behind this? Seems like a different direction.
Well, it's all about digitizing what's traditionally been a very complex, fragmented supply chain.
Right, ordering cement or steel isn't like ordering a book online.
Exactly. So Birla Pivot was launched to streamline that whole procurement process for building materials, and the uptake has been, well, pretty stunning.
How stunning.
It achieved an annualized revenue run rate of Rs 5,000 crore in Q4 FY25.
5,000 crore run rate.
Remarkably, just 1 year after its inception.
Wow.
And the platform is on track, they say, to reach $1 billion. That's about Rs 8,500 crore in revenue by FY27.
That's rapid growth in the B2B space.
It's a powerful testament, really, to how digital transformation can revolutionize even the most traditional sectors, make them more efficient, efficient, more accessible.
And what's innovative about the platform itself?
What's interesting is how it offers a sort of B2C-like experience for its B2B customers.
How so?
Things like real-time tracking, streamlined delivery modules, features you'd expect as a consumer, but applied to bulk materials.
Okay, that makes sense. Easier for the contractors.
Precisely. And it's expanded its private label portfolio too, tiles, plywood, bathware, targeting those small and medium enterprises, contractors, builders across India.
Got it. Okay, let's not forget the financial arm. Aditya Birla Capital, how does that fit in?
It's a substantial contributor to the overall performance. In Q4 FY25, that segment reported revenues of RSES 12,197 crore.
Up 16% year on year.
Correct. Driven largely by a big 27% surge in its lending portfolio, which reached RSES 1.57 trillion.
That's a lot of lending.
And their total assets under management, that's the value of all the investments they manage across asset management, life insurance, health insurance, hit RSES 5.11 trillion, also up 17%. So solid growth there too.
And are they pushing digital and finance as well?
Very much so. Their digital platform, ABCD Aditya Birla Capital Digital.
Catchy name.
It is. It's already acquired 5.5 million customers by April 2025. Offering a kind of one-stop solution for various financial services.
So online and offline presence.
Yes. They still have 1,623 branches. They're expanding that physical footprint too, even into smaller Tier 3 and Tier 4 towns. Plus, they have this channel called Udyog Plus, focused on MSMEs.
Small and medium businesses.
Right. And that's crossed an AUM of Rs 3,500 crore. So targeting multiple segments.
Okay, so bringing it all together, the consolidated picture for FY25, highest ever revenue, Rs 1,048,478 crore, up 13%. That sounds great.
It does.
But then EBITDA, the core profit measure, dipped 4% to Rs 20,023 crore. And profit after tax declined pretty significantly, 37%, to Rs 3,902 crore. Now, that might look concerning initially, a dip like that. How do we read this? Is it just the cost of growth, or are there underlying issues?
That's the critical question, isn't it? And what the analysis suggests is that this is largely a deliberate strategic choice. It looks like short-term pain for long-term gain.
Okay.
The lower profitability is primarily due to those significant interest and depreciation costs. Think about building 6 paint factories.
Right, that's a huge upfront cost.
Exactly. Heavy front-loaded investments in these new growth initiatives, especially Birla Opus paints. That drags down near-term profit. It's pretty common when you're building massive new capacity from scratch.
So investment impact. Are other areas holding up?
We saw resilience. The chemical segment, for example, EBITDA was up 52% to Rs 296 crore in Q4 FY25. Driven by better caustic soda prices and good performance in chlorine derivatives.
Okay, so strength there.
But conversely, the cellulosic fibers segment faced challenges. EBITDA there was down 36% to Rs 293 crore. Higher input costs, competitive imports from China, sector-specific headwinds.
Right.
So while there are definitely some challenges in specific segments, the overall picture really points towards the strategic reorientation, funding future growth.
So what this means for you, listening, it seems like a classic example of a company making strategic sacrifices today, taking a hit on current profits to build a much stronger, more diversified, and hopefully ultimately more profitable future. It's a long game they're playing.
Played with conviction, definitely, and an eye on future market dominance across these new sectors.
And this forward-looking view extends to sustainability too, right? You mentioned UltraTech?
Yes, significantly. Those new paints plants, for instance, they adhere to the stringent climate finance norms of the International Finance Corporation. That's a high bar.
Okay.
And in FY25 overall, we saw an improvement in their recycled to freshwater consumption ratio, up slightly to 51%. And they maintained an 11% share of renewable power in their total energy mix. It's about building future-proof operations.
And innovation, beyond the big strategic moves.
There's that too. This is fascinating.
Yeah.
Grasim is investing Rs 1,350 crore in the first phase of a lyocell fiber plant in Harihar, Karnataka, expected by mid-2027.
Lyocell fiber. What exactly is that, and why is it significant?
So lyocell is a type of regenerated cellulose fiber. Think Tencel. Maybe you've heard of that brand name.
Oh, okay. Used in clothing.
Exactly. It's known for its strength, its versatility, but really importantly, its eco-friendly production process. It uses a closed-loop system which recycles most of the solvents.
So a sustainable alternative.
A much more sustainable alternative to some traditional cellulosic fibers like viscose. This project will significantly increase Grasim's total lyocell capacity up to 1.53 lakh tons per annum.
Okay.
It really cements their position in the global sustainable textiles market. They're literally weaving sustainability and advanced materials into the fabric of their future. It's quite strategic.
So sustainability and innovation baked in. How's the market reacting to all this?
Well, the market seems to be taking notice. We've certainly seen optimistic buzz on financial platforms
Mm-hmm.
and leading analysts. Jefferies, for example, they raised their price target for Grasim's stock
Yeah.
up to RS 3,500 from RS 3,280. And they're maintaining a buy rating.
So analysts are positive.
Yes. And there's also the expectation that its inclusion in the Nifty 50 index, India's main stock index, will attract significant additional inflows. Something like $822 million.
Wow, that would boost the value further.
Potentially, yes, further supporting its market cap.
And how does this all fit with the bigger picture in India?
It aligns almost perfectly, really. You've got the government's unwavering focus on infrastructure development, fiscal consolidation.
Yeah, the big infra push.
Exactly. Couple that with rising consumer demand and companies like Grasim with this diversified portfolio, they look exceptionally well positioned.
Diversification is a strength.
Yes, spanning legacy industries like cement and chemicals to these cutting-edge consumer and digital ventures like paints and Pivot, it provides a more balanced approach to growth. It helps mitigate some of the risks that can come with market volatility. It looks like a robust model for navigating the future economic landscape in India.
What an incredible deep dive this has been into Grasim Industries. Seriously fascinating.
It really is a complex and dynamic story.
We've seen this company, born, as we said, in 1947 in Mumbai, right alongside modern India, evolve from a traditional manufacturer into this modern, dynamic conglomerate. And now, just a hair's breadth away from that RS 2 lakh crore market cap.
Yeah.
It's such a powerful story of, well, visionary leadership, these bold strategic investments we talked about, and just relentless innovation.
Touching so many parts of the economy.
Exactly. From the paint potentially on your walls to the cement in our roads and buildings, and even the financial services that empower people.
Which really raises an important question for you, the listener, to consider. What does Grasim's journey tell us? Its strategic pivot towards consumer markets, towards digital platforms. What does that signal about the future of these big industrial giants, especially in a rapidly changing economy like India's?
That's a great question. Is diversification the ultimate shield against disruption? Or is it this daring, calculated path that maybe only a few, like Grasim, can truly master?
Food for thought.
Definitely. So whether you're an investor tracking market trends, or maybe a homeowner just thinking about new colors for your living space, or simply someone curious about the powerful engines driving India's growth, Grasim's story offers this really compelling blueprint. It's not just a milestone, that Rs 2 lakh crore figure. It feels more like a promise of what smart, sustained enterprise can achieve when it dares to transform itself. Which makes you wonder, what other traditional industries, maybe in India or even globally, might be poised for a similar groundbreaking transformation right now?
That's the next question to explore.